So glad you're with us on the Money. Brad Johansson with Ryan Wheelis, Allied Wealth. And I want to talk about something we probably all have in our house. I know I have one. Unfortunately, I probably have multiple, and that's junk drawers because stuff just ends up everywhere. It's not that I'm not going to use it. It's just kind of disorganized. I've got batteries. I've got rubber bands. I've got probably 50 cards out of a 52-card deck. And in some place, I've got them together where I know the whole thing can work. This kind of translates into what we may have in portfolio. I want to talk junk drawers. And we have so many people come into the office and will say, I've got this and this and this. Can you tell me why I've got it? And you'll look at it and you go, oh, my goodness, we need to clean this up. Tell me how this translates into what you see.
Well, I have people come in and they've got complete, chaos. They've got money here, they've got money there, they've got money over there, they've got money over there. And I've literally gone into a meeting, Brad, and looked and just laid the stuff out on the table and looked at folks and said, you need help. And this is what we're going to do. I'm going to help you today, okay? Yeah. And we take all these pieces, this junk drawer, if you will, and we put them together. And we build a written comprehensive plan. We build an income plan, an investment plan, a tax plan. We look at healthcare, estate plan. We put all plan together utilizing these various pieces of the puzzle. Okay. Now, what's really interesting is sometimes when we're talking about putting this plan together, the question always comes up is, well, how are we going to allocate the money? What's the money going to be in? What's it going to be doing? How's it going to work? Where's the money going to be? How's the money going to get from where it is into my checking account so I can afford to pay my grocery bill next month?
Right.
Are taxes withheld from it? How does all this stuff works? And it's really interesting because no matter how much money somebody has, it's important to go all the way down to those very rudimentary levels because as advisors, I think sometimes we do this every day and we forget what the people across from us don't know. And so what we got to do is close that gap between what you know and we know as advisors and get you educated.
Here's the problem for a lot of what I see when people come in with the junk drawer. They've been with somebody. So somebody has helped them create this junk drawer. Because for whatever reason, that advisor may be benefiting from having, well, this in your portfolio and this in your portfolio and this in your portfolio, and you think you have three different things, and yet you're invested in Microsoft or in I don't know, something that is in every single one of them. And the junk drawer says, well, I've got a lot of different things, and yet you're really not diversified at all.
Well, and that's a great point. A little digression here, but great point. And I love it because I think what a lot of people look at is they get a statement from their, and I'm not going to pick on the Vanguard, for instance, because Vanguard's a great company, but you get your Vanguard statement. And you look on there, and you've got 25 mutual funds. And you say to yourself, I've got 25 mutual funds. Clearly, I'm diversified. All right? Well, the reality is, how do you know that? Because have you run a correlation report on your portfolio to see if the funds are performing the way they should be? And what do I mean by that? Does it mean growing as they should? When the market goes up, do they go up too? When the market goes down, do they lose less than the market? That's actually not even what I'm talking about. The reason why you have 25 different mutual funds is the same reason when you look at a football team. You've got short guys. You've got tall guys, you got fat guys, fast guys, slow guys, guys that run the ball, guys that catch the ball, guys that block, guys that kick. And Brad, what are they trying to do?
Put together a team that wins.
That scores touchdowns, right? And ultimately, they want to make it to the Super Bowl, all right? So what you have is a team of characters that are all offsetting attributes to one another, all right? They work together in unison through defending or being offensive nature, getting return, defending, not losing in down markets. They all should be working together, all right? So what a correlation report will reveal is, are these funds working together, or are they all doing the same thing? And it's mind-boggling to me, the number of people who come into the office, call off the show, of course, and they want us to do an x-ray on their portfolio and take a deep look into how things are working. And I go, listen, you've got 25 mutual funds here. 23 of them are acting the same way, doing the same thing. Of a 25-member team, you've got 23 kickers, no quarterback, and no offensive lineman.
Yeah. You talk about, which creates the idea of a toolbox. And if you're putting together a toolbox, aren't you putting stuff in there that at some point you can use?
For sure. And I think what we have to look at is once we start talking about allocation, for somebody who's risk averse, I can say, hey, let's put your money in the stock market.
Okay.
All right. And they're going to go, no way. I don't want to lose my money, Ryan. And then I've got people that are just anti-annuity. And I say the word annuity, and they just clam up and they just
forget it.
I'm not even doing this guy. He's trying to sell me an annuity, right? And here's the bottom line. Whether it's a stock, a bond, a mutual fund, an annuity, a structured note, a private equity firm, a stock portfolio, ETF portfolio, they're all out there, right? But here's the way you have to look at it. They're all just tools. And there's no bad tool. There's just the right tool for the job. So if I go out to my toolbox in my house and, flip over the top and I look in there and what do I have? I've got wrenches, I've got screwdrivers, I've got a hammer, I've got a socket set, probably an adjustable wrench, maybe a pipe wrench. I've got all these different tools. Is there a bad tool that I just listed in that box?
No.
They're simply the right tool for the job. I don't grab a pipe wrench and try to go screw a Phillips head screw into a piece of wood. I grab the screwdriver. Why? Because, Brad, it's the right tool for the job. And it doesn't mean I may hate a Phillips head screwdriver. I don't care if I like a Phillips head screwdriver or not, because in that moment, it's the right tool for the job. So when you look at how to build a portfolio, there are different tools to accomplish different things. And I think one of the biggest mistakes people make is they believe that all of their money should be managed the exact same way in the same tool. And folks, that is the quickest way to find yourself in a situation where you may no longer have the asset base available to you in a down market to finance a lifestyle you worked 30 to 40 years for.
I mean, what we're talking about, the idea. You've talked to somebody in your house, or somebody's talked to you about cleaning up the junk drawer. That's the simple part in the house. We're talking about a fiscal house that you need to clean up because you may not even know what you have in the drawer. We talk all the time, you have to tell your money what to do. That's what we do at Allied Wealth, is understanding what you have. And as Ryan said right at the outset, look, I've got this in front of me. I'm going to help you. And don't we all want a little help? It's okay to ask for help. You don't need to be embarrassed. Maybe I haven't done enough. Maybe I haven't put it together the right way. Let us help you. Stop waiting. Call now. 844-944-7555. Let's clean up the junk drawer.